Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Happy Monday. TGIM. And it is. So, listen, to save the work later. Undo. There we are. Undo. There we go. Skip bad. There we are. I can see us. Skip trial. We are there. I see us. It's just me. I'm here by myself. Anyhow, you can see up on the screen here, dollar index. You see it over on J4X right there. We're generating a red. Same situation on Chicago Quant right there. Red for was it Friday, and red and green today. A little volatility signal kicking out. You know, they closed it in the daily sell on Friday, so they thought, hey, let's sell some dollars. Go get some pizza. And then from there, you can see today it's flirting through the zero line right there. You can see that. It's plus 139. And the weekly has been marching and marching and marching along, coming in, starting off in the down here in, what was that? It was August 17th. And where are we at now? Today is September 19th. Okay, so for over a month, we've seen the product move up, just up and away. It's kind of interesting in that fact, because we watched the euro and GBP, British pound and so forth, and it doesn't have anywhere near the juice. It doesn't have that energy. Oh, there we go. What do we got here? Duke Scott, Doc, weren't you set to do 12:30 GMT Tuesday, not on Monday? No. This is the norm. No, it's the norm. All normal. We just tried a couple early ones and it didn't seem to work. Was it Janos had said something about don't measure last Monday's action because warnings weren't given to subscribers or viewers or something like that. If you should I not do this? Okay, I appreciate that. I'm sorry. Maybe I screwed up. It's very easy for me to make the mistake too. I can easily make a mistake faster than most. So this is Janos here, moderating from the profile. Oh, okay. Well, you know how I am. I can make a mistake just as easily as anybody else. Was I supposed to start at 5:30 this morning? I saw that I was set to start at the normal time. Oh, good. That's excellent. Glad to have you back, Janos. When I know when you're back, that means you're a little bit safer than where you might have been. But that's the job of the job. I hear you, brother. Brother in arms. What else we got going on here? How's the weather over there lately? Has it cooled down? Was it hot? I know you guys were cool. And then, we had lots of action in France and Germany and England. The warm weather, so... Oh, excellent. Is that like what Bill Clinton tried to define back in the 1990s? What the meaning of is? Do you remember that? He got charged with rape or something like that, and they challenged the word is. Do you remember that one? That was funny. Eastern Europe has warm weather. Good. Hope the plants are growing nice. Yeah, let's look at the 500. 500 is interesting. It tried to... there it is right there. It tried to lift up on Friday. You can see it just missed it by the hair of its chinny chin right there. And still in the pressure. And I guess, what's it? Since September 2nd, that week, it's been in the sell. Remember that head fake we had right here where we got into the daily buy, but we could not get into the weekly buy here. And the pressure is still on there. And it seems to be that way with pretty much most of the stock indices. Same thing with the NASDAQ going on a fourth week. Let's see. I think the Dow, is the Dow on a fifth week maybe? No, it's on a fourth week too. And I know it was on a rampage. Check this out. This is the Russell 2000. Oh, I got to change that too. Let me fix that. Russell 2000 is just finally getting into the sell side of things. Let's see. We got that's the September contract. Let's get the December contract up on there now. There it is. And let's see, right there. Did you hear Biden said that the inflation is not hurting anybody? It's going away. Something like that. Guy's a whack job. Total whack job. That's right. And we went into the weekly sell last week on that. So even the weak equity stocks here in the States is showing, selling more. Now, I think, see how here on the Russell, this is like the most speculative of the indexes now, the Russell 2000. And you see those lows that were set down here in June? Check out the S&Ps again as an example of that. Let's contract it up a little bit. And let's go like that so you can see it a little bit better. So you can see the June lows here don't seem to be I don't know, they just don't have that look like they're trying to challenge it. It looks like it wants to be a higher low. And then let me go back to the Russell again. Where is it at? Russell, right there. Same thing. I mean, they're not giving it up, you know what I mean? I asked Google in my car on the way back, and it turns out we had only a 4 degrees Celsius difference with Malibu. Nice. Do you know that the North Pole now is moved into the Ukraine? Not the Ukraine. Into the Siberia. So the North Pole used to be in Canada, and it's about 1,500 miles off now. So, I mean, you could take a look at 1,500 miles and Latvia and Lithuania and all like that, and I'm sure you're seeing a lot of difference going on there. The magnetic field has shifted dramatically. We've lost almost 30% of our magnetic field over the last 3 decades. And the South Pole now has moved from Antarctica, and it's in the Indian Ocean now, heading towards Australia. So there's a lot going on scientifically that I talk about here every so often, but nobody else will talk about on the news or anything like that. And so they come up with these crazy things about, like, what do they call that stuff? That there's the big religion, global something, global warming, global change, global something. It's really a religion because it's surely not based off of science. They don't count the sun as having any effect on Earth, this global climate people. So in other words, they're not looking at the sun. They don't think it shines. So it doesn't surprise me that you might be warm because the planet is shifting temperature-wise, and it's affecting the whole solar system too. So in other words, Earth must control the solar. It's like as if we've been thrown back before Galileo. This religious movement. It's like the same type of people that locked Galileo up for the rest of his life, that type of thing. When he dared suggest that the Earth orbited around the sun. And I guess these people, they think that Earth controls the whole solar system. So it's a very strange thing. I don't understand that. Hey, Robin. But yeah, it's curious. I mean, if you don't tell me what your weather's doing, I'll never know, because they don't tell us any. I mean, I have to follow my Electric Universe weather people. They're the only ones paying attention to it all. And Rob and I had this discussion this morning. We were talking about, here's technical analysis, really. I know this seems like we're drifting from technical analysis and markets and Forex and so forth, but Robin and I were having the conversation this morning. We have a new interester. I guess somebody's looking at it or something like that. And they do the astrological, so they're like Merriman. They do or Art Crawford. Was it Art? That's the guy I was thinking, Robin. Art Crawford. And Robert Heck and all these other financial, astronomical, astrological, sunspot people, And so the guy's talking to Robin, and he's trying to, harangue him, I guess. I don't know. And the end result is that he's, I said to him, ever since quantitative easing, a lot of that technical analysis is not analogous, or, it doesn't work like it used to. So in other words, you could look at astrological data, and it would have influences on the stock market. You could see that on the equity market, on the currency market. You would see that influence on interest rates. You would see that. I mean, they would be kind of in sync, you know. But now that there's quantitative easing, they don't have anywhere near the accuracy as they used to. So, you know, when we talk about, I guess, earthly astronomy, earthly influences of all that, that's who I was trying to remember. Remember that? Arch Crawford? Robin, that's the guy. I could hear it in my head. I couldn't get it out of my mouth. Robin and I had this discussion like 2 hours ago. He was the one that made me pay attention to it. And then there was another guy. I went from him, who was a New Yorker, and we'd email back and forth. I would, you know, tell him my work was saying this back in the 80s and the 90s, and I can't think of his name. He passed on. You know, he died. He was an older man. I can't think of his name. He followed moon cycles, and so he was looking at moon cycles and so forth. And then from there, I think it was Robert Heck down from Carolinas, around late 90s into the young 2000s, and then from there I've been paying attention to Raymond Merriman. You know, I just watching them predict, you know, market movement with astrological signs. We put our math into it because, you know, I always say, you know, my math is before there was a Fibonacci sequence. And so, and I say that because my math, our indicators here at, you know, Chicago Quant are ahead of the Fibonacci sequence. When you look at the Fibonacci sequence, our math is already turned. So it's obviously a pre to the Fibonacci sequence because it's able to predict before the Fibonacci sequence predicts. So I mean that's, you know, that's what I mean by that. Our math will predict before the Fibonacci sequence predicts. So obviously ours must be more of a fundamental form of math than the Fibonacci sequence or the Golden Thorpe magic number sequence or like pi. And so when our math predicts obviously all the time before that, I have to assume in a logical process of scientific thought is that our math must be more fundamental, which means if it's more fundamental, in other words, it's been around longer, it must be part of the building blocks of these mathematical sequences when you look at algorithms and so forth that, you know, like you look at pi, that's an algorithm really. Pythagorean's theorem, you know, you look at the Fibonacci sequence itself, and you see the rings and the trees and so forth. You see these characteristics. They're all measuring physical space that we're not very good at seeing. In other words, we don't see this physical space, but it's there. You know, just the way I want to use the word pretend, dark matter and so forth. So, you know, we were having this discussion, Robin and I, about old fundamental, or I guess you could say old fundamental technical analysis. In other words, technical analysis that was always being used by people for, you know, since W.D. Gann or R.N. Elliott. R.N. Elliott is a algebraic look to W.D. Gann's geometric look. And so you see the spiral, and that's the geometric look of technical analysis of what an interesting conversation we're getting into here, of, you know, W.D. Gann's spiral. Then you see the rings in the trees that match up to the spiral. When you chop a tree in half, or you chop a tree down and you see the stump, you see the rings, the growth pattern, and that matches the W.D. Gann geometric pattern, which when you look up in a telescope and you look at an expanding galaxy or a galaxy, it matches the geometric pattern. And so you know that all these things have some influence on us in a physical way that we don't totally understand. And so my math is ahead of those maths. And how do I make that statement And what's the simplest proof of that statement? That is that I've gone into physics and physics departments, especially in Princeton and so forth, and seen some of the top people discuss it, and I sit in the back of the room just not saying a word, not informing them. And like you look at expanding galaxies and the measurement of the thermodynamics of them, and my math is predicting it before their math is predicting it. So that means that my math is ahead of them. That's it. Nothing super magical or fantastical. It's all I can I on my LinkedIn, and I think on my Facebook I paste it there, and I call it the shape and value of time, because and that's it. So now that's the end of that. Really, I'm not trying to get too deep here about all that. So when I look at the weather, when we get into the conversation with weather with Janos. By the way, oh, that's really nice, Janos. Thank you. Half the guys don't get the terms, but we sure enjoy the results. By the way, has anyone recently asked you to explain the indicators? Yeah, last week or a week before. Matter of fact, while you were gone, the day after, and we actually labeled that how to read, and I think I added J4X in with it too. I said something like how to read our indicators and J4X. And we did that. I think that we posted that as a title to one of the webinars about literally 5 days ago, when just the day after you left, I think, or it could have been the day you left. And someone asked, and I went on the conversation I'm having now about the difference between W.D. Gann and R.N. Elliott and our work and so forth, and Fibonacci and pi and all. And I went into the conversation. I got into this long conversation looking at, like, here, let's go to J4X. Here's a good example. So I was explaining the green line being the fast stochastic versus the dashed line being the slow stochastic. And then looking at the Hinky-Ashke, which is a four-way average of the open, high, low, and close, and then divided by 4. And so, you get this like moving average type of look of a daily bar. And then it matches up. Let's see if we can do this here. Can we do that? How do we do this? Let's do this. I'll go like this. I go like that, and I'll just bring this down for a second. That's how the Hinky-Ashkes match up like 70% of the time to my dots, because I do a combination of the moving average to it. So the moving average, notice you got like 3 greens here on the J4X, and we're not looking at the same product though. That's it. Let's put euros in there, because then we're looking at the perfectly same. I'm watching the CME dollar index, and you've got the ICE index. Let's see, right? Let's go to there. Let's go to the 4X, the actual 4X. There's the euro. Okay, and let's put euro up on J4X. There we go, right there. So what you see what's it? 1, 2, 3, 4, 5 reds going on there, and then you see the same thing here. You see red dot, red dot, red dot, and then you get a red and green a volatility signal telling us that something's coming aggressively in the volatility side. And what do we get? We get an outside day the next day. They sell it down, and then they take it out at the highs of the day or close to it. Yes, this is Friday. Then today, there's no dot. So that's what we're looking at here is when we look at, this is a moving average of the 4 points of space, the open, the high, the low, the close. They're the 4 points of space of that bar. And then what we do is here is we're looking at the 4 points of space that I measure, which are a little bit different because I have a different function of time. So, but the Hinky-Ashke bars do a good job of keeping up with me because it's a moving average of the 4 points of space. And so, we developed this simple concept. What I did is I took the basics of my math and put it on J4X here. And I was referring to it as Manhattan or something like that because of the physicists back in World War II using this indicator here, the stochastic, and they were using the moving average up here, but not the way I'm using it. This is even better. But I really think that if anybody wants to understand the number one hedge fund in the world, Renaissance Technology, that's why we call ourselves Chicago Technology. Renaissance is the number one hedge fund in the world. It's funny, they don't even interview Jimmy Simon or any of those people at Renaissance, and they have the Magellan Fund. And that's the greatest successful hedge fund in history. And it's been on, and Jimmy Simons, who started it, was a code breaker for the like NSA, CIA, that type of thing. And at the end of World War II, in the beginning, so he was too young to be involved in the Manhattan Project, but he was working out of Princeton, out of the old CIA operation on I forget the name of the road there, not Lawrence Road. I think it's Hopewell Road. There's an old CIA operation. It's been turned into a hotel and a learning center and so forth, and he was working out of there. And so he heard about the stories of the guys at Stony Brook. And so Jimmy Simon, who created Renaissance Technologies, in the early 60s, when the physics department was falling apart there, I had a physics professor who got his PhD out of there in like 64 during Jimmy Simon's time. He took over the physics department, but he's not a physicist. He's a mathematician. Actually, there's a formula in string theory it's the Chobel-Simons manifold or something like that. But anyway, so he takes over the physics department at Stony Brook, where they were crunching the numbers for the Manhattan Project. That's why I call this the Manhattan indicator. And over here on J4X, using these tools here. And so he takes over the physics department when no one seemed to want it, because they had a mainframe there that was used for crunching numbers for the Manhattan Project, which those guys, I knew a physicist back then who was he worked there and during the Manhattan Project, and he was aiming at the mainframe computer at the New York Stock Exchange because of the 3-hour time difference. So in other words, you had Oppenheimer and Teller and all those guys out in New Mexico, which is a 3-hour difference. And so the guys in Stony Brook at 10 in the morning, it's 7 o'clock in the morning out in Los Alamos. They had their project meetings, I think, around 7:30 in the morning out there. So what happens is Oppenheimer takes, the crunching numbers that need to be crunched, and he sends them to Stony Brook by, say, 10 o'clock, like 8 o'clock or 8:30, New Mexico time, which is like 11:30 New York time. And so for an hour and a half, they're trying to follow the New York Stock Exchange with their mainframe computer that they're building the Manhattan Project with. So that's why I call it the Manhattan indicators. Anyway, you're right. I guess, Janos, this is going to be, I think we're losing bodies too on this at the same time. But in the end result is we will label today's webinar as explaining what are indicators, and something like that. I think that'll be the title to this. I'll come up with it, or you'll come up with it. We'll figure it out. Anyway, there's the euro. You can see euro has strength going on. Notice the weekly already right here is getting very close to the zero line. It's pierced both the bottom manifold there. See that right there? Both the green line and that. Notice that the echo I've been calling lately, I haven't really explained that too much. That is the super. That's the 5 right there. So in other words, we're looking at green and white are the gas line 3. The 5 is the blue dashed line. That's what that is. So that's a gas line 5. So we just call it the 3-5 super. And you can see here, this is breaking through the bottom of the manifold, the negative side of the manifold. The histogram is heading towards the zero line. And if the echo, the blue dashed line, turns up like on some crazy angle with this getting through the zero line, that means that they're going to be selling dollars and buying euros. That's what that says right there. That's exactly what that says. All right, now over on J4X, you can see the same thing. We see all the red. It's starting to turn right there. You can see that the green line is turning, just like our green line has turned right there. And it's trying to get through what I refer to as a three-dimensional zero line, which is the slow-moving stochastic. And that's the name of the game. And what we'll do is we'll go through all the different, currencies and we'll see what's going on. Like here's the cable. You see the cable is still having some weakness, and it's not lifting. And you can see even with it trying to lift right here, both these two lines are below, and you can see that the super is just barely getting through the manifold, but not in the plus like the way the euro is. So obviously, like the euro GBP pairs trade is winning on the euro side of it. Let's put it up on J4X there. I guess, Giannis, that was a pretty good explanation out of the whole thing. That was a real deep dive into astrological, astronomical, and basically modern math, or math itself. Looking at Fibonacci versus, or say, looking at algebraic algorithm, which is which is R.N. Elliott, versus a geometric algorithm, which is W.D. Gann. And then you have us. What I've done is I've married the two. When you get up into differential equations, you can marry the two. When you go into topology and differential equations, you can marry the two together. And that's what I did, is I married the two together. Not many market technicians usually will marry geometry with algebra at that level. It becomes a little too, but we've made it very easy to read. So, it's a very easy visual. A lot of times what they try to do is they unfortunately try to make it more mathematical in the sense of, the numbers, and you got to try to figure the numbers out more. And we've made it so easy to just read. All right, from there we go over to the Swiss, dollar Swiss pairs trade. You can see the last 2 days are green. 3 out of the 4 days are green. You can see the green line is above, so you can see some strength has been pressed in or been pushing the dollar Swiss up. And there it is there on J4, Chicago Quant right here. You see the volatility day, and then you can see the drift up. You can see it there. It's been above the manifold, of course. So not only the dots, but that. And then you can see that we've been in a weekly buy since, where's our line at? We've been in a weekly buy since right there. And that's what we're talking about. Matter of fact, there's a good example of the 5 gas, or the blue echo, or right there. You notice that it's flatlined here, and this is starting to turn up. And if the euro does this same thing, since it's flat, let's go back to just a quick peek at it again. Look at it. It's just flatlined, really, in there. And so if this thing joins up and they start moving up together, could be a real good move on the upside on the euro. Could be a very good upside on the euro. So. Yeah, someone has this then. Okay. All right, so let's, from the Swiss, right there, be interesting to see if we can get this thing to, I guess, you would think if the dollar is going down against the euro, you would think sooner or later that the Swiss will start to do the same thing, and this could be literally a B, and then a C. And when we tighten it up more and look at it, you see it's been trying to stay in this larger outside channel, which we have to fix. We lost our folder last week, the file. The file just melted away, for whatever reason. I think we had memory problems or something like that. And so, let's see, what is that? Why are they doing that? See, they're not even matching right. So that's got to be there. That's got to be moved over to there. And that's got to be moved there. And that's got to be moved there, like that. We had a memory issue last week. I had to straighten that out. There they are. There. That's much more better now. Okay, so, and there's the zero line. And there's the day quant up in here. And then we had the old channel on there, which we missed for a long time. That's going back to 2000. Let's see let's put that channel back in there. So it was like that for a long while, bounced off of it, and then it became the support, then became the resistance, and then the inflation started to kick out. And then what happened was once inflation, this is back in April of 2022, when finally the Federal Reserve said, okay, it's not it's right here in March. They finally said, when we had been saying that inflation is around, back in last summer, 2 summers ago, we were talking about the inflation when it was at 5%, and they kept on calling it transitory. This is where they declared that it wasn't transitory anymore. And that's what happened. When it exploded up, the central banks all joined in, and we keep on waiting for this thing to come back down into that range again. And we usually Fibonacci those ranges. We put the Fibonacci sequence up there, and there's a usually good example of how our math is ahead of the Fibonacci all the time. Let's see if we can fix it again right there. We'll put the sequence there to there, like that. And now what we've done is we had, before this thing melted on us last week, we go like that to that. And we've been waiting to see. Let's see, let's save that. Save workspace. We've been slowly fixing these things when people ask. When we talk about the channel. And there's the channel. So you can see here, there's the Fibonacci. Our math is working its way up high. You can see that. It's one of the highest points. And then all of a sudden, it starts to break down. And it confirms that there's pressure. In this case here, it broke down. But it was in a weekly cell already. It started smelling it, I guess you could say. Did it smell it there? Let's see, was that the minus there? No, that was plus. So we were into the minus there. And then we were in the minus 2 weeks before that too. There we are. And then what it did is it jumped into the buy with that weekly there. I think that was the rate increase of 0.75 percentage point. That's what that big spike down was. And let's just fix it like that. There we are. And then there's our last one. Was it last week? Storm was here. Where are you, Storm? You around? Storm was pointing them out. And so you can see here it's been in the buy since here. Whoa, I didn't mean to move that. There we go. And that's the strength in the Swiss. And I keep on thinking that it's going to come back down, challenge this, and find its way back down to here. But this seems to be the new channel now, and it hasn't challenged the bottom yet of it. It has not challenged it. This got very close. We thought it might hit the channel, but it didn't. So, where are we at here? Oh, and that's it. We're in the daily buy now. This is the 4th day. There we are. And so we'll just save that again. And then from there we drift over to the Turkish lira. But if anybody wants to see something, shout it out. And there's a dollar Turkish lira. It's at another all-time high or right next to it. Friday was 25.8. I think that's the all-time high right there. There's a 27.7. That is 20. Oh yeah, 29. So that's the all-time high. And then today we are just underneath it. That was a wild move there, whatever that was about. And then let's see. What is that? Signal. Right there. Let me just give it a recycle. Maybe it'll straighten that out. Yeah, there it is. It's been in a weekly buy now for like 29 weeks. It's been in a weekly buy since February, early February. Right there. February 17th, middle of February. in the 1350 area. And now we're trading at the 1825 area. So, you know, we're watching the Turkish lira again have its issues. Turkish lira having its issues. Now let's take a look at the real Turkish trade as far as I'm concerned, and that is right here. The look at that, it's flirting with the weekly buy. Went into a weekly sell last week, and now it's flirting with the weekly buy already. So it's just getting ready to switch gears again. There we are. So went into the buy back in here, and now it's flirting with a sell here, and from that move, that's the interest rate shift, and now we're in the daily buy for a second day. And at the same time, you know, euro Turkish lira is a much better trade than the dollar Turkish lira. And you can see here we're trying to climb right back into the weekly buy again as we speak. There we are. Now from there, let's put Turkish lira up on J4X too. Right there. You see 2 days of the green dots, like our 2 full days of green dots with a third day of both red and green. You see the green line down at the bottom, the fast moving stochastic moving up with our green line. So you can tell the pressure is on the upside again, not on the downside. Now, let's see, CAD. We go to Canadian, and we see the Canadian moving pretty high up. You know, it's making its move beyond the range, which has been following the range for a couple years very steadily. And then you can see here the dailies, you know, we're on the 5th day there. And you can see on a weekly basis we are on the 5th week there. Now what we do is over on J4X, we're going to throw you oil up on there, because we watch oil with the Canadian all the time. And so here's American oil right there. You see as it goes down in value, the Canadian moves up in value. That's how that works. Now what we'll do is we'll put Canadian on Chicago J4X right there, and we'll put oil up on here. We just switch them around. We're using November oil this week. There it is, November oil. You see it's moving down in value, and what do we see over here on J4X? We see Canadian moving up in value. See, that's that inverse relationship that goes on. And you can see we closed in a weekly sell in the oil last week. And so, you know, where we're going to, it looks like we're moved past the $90 range consistently now. And now we're moving in a 90-80 range. So that's starting to, you know, leave us with another question mark, really. Let's see. There we go. Indeed, indeed. So, from there, we drift over to the South African Rand. And that's what we pay attention to there, is the South African Rand. South African Rand right there. See, the Rand is doing the same thing as a Canadian. It's moving up. And normally, when that's moving up, we find, we'll put it over on J4X, we find gold moving down. And there's all that red. And then what we do is we reverse it out. So now we go put South African Rand in there like that. And then we go and put gold in right there. And you can see the pressure that's been on it since. I'm a little confused. That was a sell. So what's the? Let me see if we can straighten that out. Mondays are always like this. It always gives, we have to. Usually I have it cleaned up. Let's go to NYMEX Energy Outcry or something like that. Now that's even crazier. We're going to have to straighten that out. I guess that's a limited feed. We don't want that. We want to go back to normal. Try that. See what that does. There, that's better. But that should be down. I'm not sure what's going on there, but that was a sell that day. So we'll straighten that out. We'll go and double check it. And the weekly sell's been here. So the pressure with gold going down, as you see on J4X, South African Rand rising. Ta-da! Then from there we drift over to what do we do? Oh, yen. We go take a look at yen. Unless anybody wants to see something, we'll jump right to it. You can see there, 3 days kind of weak. There you go. And that's it right there. You can see here the yen fell into a sell and is trying to lift right back up into the buy. We got a volatility signal kicking out there too. Let's see. Oh, 47. How you doing? Nikkei. Konnichiwa. And S&Ps. Let's check them out. Here is the Nikkei and the December contract. Nope, not there. Oops. Right there. There it is. You can see here it's been in the sell since the 13th. And it's playing with the lows right now as we speak. And it's in a weekly sell last week. Now why isn't it showing us that this week? Let's fix that. There we are. There we go. And so there's this week's at the same time, feeling the pressure. And that's the Nikkei. And then let's look at the S&P 500 right there. Same situation. Except for this is the fourth week, basically. So you got the fourth week in a weekly sell, which started back in here. And somehow or another they thought interest rates were going to be flat or do something, I don't know. I took it up, and then the news came out right there. And oh, that was CPI. I think it was CPI. That's what it was. And that was a CPI. That was CPI. This was CPI. That's what it was. And they get this confirmation again that, guess what? Inflation is here for the time being. It's not transitory. You know, that word transitory is still floating around in somebody's ear, like the money managers and so forth. They kind of keep on thinking that it's transitory. And it's not transitory until we remove this form of government, you know, or this leadership in our government, not form of government, but this leadership, because they're practicing a form of government that is illegal and unconstitutional. That really hurts. Hey, George, how you doing? No problem, 47. Doc, silver shows this morning entering a weekly buy. Is that right? Yeah. Yeah, I backtracked. I double-checked all that math. I got to clean up the gold. I see gold looks a little wonky. But yeah, definitely. Check this out. Right. Is it there? There it is. Yeah, it is. It's flirting with it again. But then, you know, silver has been acting strong. You know, it's been fighting. It really has been fighting. Look, that was a steal again down in the 17s. They gave you a second chance to own that thing in the 17s. I mean, that was the June, right? Yeah, that was the July. Okay. And they didn't get in the 17s then. Let's scrunch that up so you can see it in a little bit better way. Yeah, I mean, that was a freebie. I mean, really, when you really think about it, I mean, down there, you know, and then it went into the daily buy, kept you pretty safe. The day before the sell-off, it put it into a sell, and now it's going back and forth in a goofy situation. Let's widen that out again. And what I mean by goofy is that you got some selling out of it today, but it's not that far off of where it's at, and you can see the weekly is really fighting hard to get going. You see, this is here. I'm more pro silver than gold. It seems to be, screaming at us that way. So, I really think that, and I think I need to clean up the gold. I will take a look at the gold and clean it up. Something's wrong with that. I didn't realize that this morning when I sent out the morning charts, but I'm going to clean that up right after the webinar. Matter of fact, let me go like that and like that. Yeah, and I just want to take a look at that one. Yeah, it's a real disappointment to watch the metals complex go down in value when we have inflation. I know markets like to let me just describe this. Markets like the old rumor, the old saying, buy on rumor, sell on news. Okay, and so they like to anticipate before it happens. And that's why you see some of the strangest trading going on sometimes, is that, as CPI is still bad, they were anticipating, well, we know in 6 months that rates are going to come down, so we're going to buy some. And then what happens, let's go to the S&P. S&P is a perfect example of it, because it represents everything from the currencies and on. So there's the last CPI, and there's this CPI. Okay? So what happens is that, is that right? Yeah. So what happens is that this pressure, they're anticipating. This here is the anticipation. This here was the anticipation. It was a little bit. But this one, they were convinced. And the further we go, it's going to get bigger. They're going to be in, the money is trying to buy the lows. And there's so much cash around that they can do that. They can buy the lows. They're paid to buy. And so, they're not paid to go short, that's for sure. And so, like 9.5 out of 10 funds are long funds in mutual hedge, so forth. And then you have maybe 5% that could be short funds. And then what you have is not even 1% are like myself, long short funds, where they actually go long short, trade long short, do both. I mean, when we had our hedge fund, I shut it down. We were up 26%. That was too boring as far as I'm concerned. Might as well just trade my own money. I didn't have a salesman going out and bringing in dollars, and I'm not going to go waste my time doing it. So I'd just rather trade my own money in the end result. But when I was incorporated as Burgoyne Funds, my partner Burgoyne was supposed to be the salesman, and he wasn't. So he got lost in doing other things, and next thing I know is that all my money was in the fund and nobody else's. So end result is that markets like to buy on rumor, sell on news, or trade on rumor, sell on news. And that's what we're seeing now, is that they keep on thinking the rumor is that they're going to lower rates. They're not going to allow, the Federal Reserve and the quantitative easing is not going to allow much damage. So in other words, where do you see, when we put up the bonds, where do we see the numbers? We see them in the threes. I mean, we got 8.5% inflation. The 3-month inflation rate is 10%. And so why aren't we seeing interest rates at least at 8.5%? I mean, they should be at 10%. They're not. And so then you go, okay, let's look at gold and silver. And what are they doing with that? They're walking away from it. They're doing the anticipation. They'll sell the metals when interest rates. See, I think what's going to happen. They're going to buy the metals soon. I really think they're going to buy them because I think interest rates are going to drop. So, right. So where we go from there? From there we go to. I hope that answered you, George. But yeah, and we're going to clean up the gold and figure out what's going on there. Because that's what's good about that little line I put in there. I kind of gripe about it, having to put the line in, you know. But that's because sometimes the exchange from dark pools, they shift the numbers on us. So that's what that comes down to. Cool. All right. From there, we go over to, let's see, where are we at? Let's finish the last currency off. Right there, the Mexican peso. Let's go south of the border. Let's drink the tequila with the worm in it. And there it is right there. We went into a daily buy right here. And it's been in a buy since. Oh, it went in on Friday? Yeah, Friday it went into a sell. Right there. But we're in a weekly buy. We closed in a weekly buy in the Mexican peso. So you don't want to take the short, you know. It's one of those stand neutral situations. Now, let's grab a hold of that, move it over. What is it doing this week? It's reflecting a sell again, right back into the sell. We're seeing that in a few of these products where they're putting pressure on them. There we are. And there is the sell on a daily, and we're seeing a volatility signal. So there's a lot of lost action going on in there. Oh, what's that 47? I wonder why the U.S. T-bonds are going down and behaves like the stock indices. Here, I'll show you. Like I said, they're playing with the rumor. They're convinced. See, I think bonds know. Let's see. Here's the 30-year right there. And you can see, yeah, it's firm. And it's trying to lift here. We've been in the sell like that. Let's put it over on J4X too. There it is, right. And that's the Dow. I know it's on there. There's a bond. There it is. There's the T-bond. That's the 30-year. I think that they're bottoming it again. They're gonna. They will put the rumor in the market again that the funds will. And who knows? They may be just talking their books so they can sell. Anything's possible. But we've been in a weekly sell on that for what, 3? This is the 6th week. We're seeing a little buying. Maybe there's some profit taking. I mean, that's pretty much the name of the game at this point. And that's pretty much what we're seeing nowadays. And so it's not really going to, shift any in the sense of they're going to keep on doing that because that's the way it works. In other words, markets do that rumor thing. And when you have a corrupt or you have a broken information system like we do in the States here, we have the national media won't give us really clean information. And since they don't give us clean information, it makes it tough, So, in other words, when Biden says something like we're back to zero inflation, the media cheers that on when we all know that we're at 8.5%. So, Democrats bought all 7 major news organizations, even Fox News they own. Disney bought it 4 years ago. And so when you have, we got to get rid of the FCC so that more people can have news organizations. So Fox Business is a different company than Fox News. So that's part of the problem, is that the news itself is corrupt. It's one-sided because it's spoken. Spoken only when spoken in favor of the political party in power right now. And when they're not in power, they're their mouthpiece when they're out of power. So that's what it comes down to. And that's the name of that game. All right. Where do we go from there? So we've done all the currencies. We're looking at the bonds. We've seen the oil contracts moving down. Let's take a look at Brent over on J4X. There's Brent. You can see the pressure on that. It's underneath the 90 area. The American oil is down below the 85 area. It's like 82 or 81 or something like that. There's November. 80. 82.03. There it is. 82.03 down towards the lows. And in a weekly sell. And then when we take a look at Nat Gas, let's see what Nat Gas is doing. Right there. There's October Nat Gas. The front month. Been moving down from the $9 area down to basically $7.50. Still in that weekly buy. It's been a long run in the weekly buy. This is the 8th week. But it is breaking down. Definitely breaking down. And then when we take a look at it over on J4X, you see, U.S. natural gas. Where's it at? It's around here somewhere. Cotton, gas, there it is. So you see that 7.6. Then we go and look at that Spanish company that makes money in natural gas. And at a high price, it was doing fine. And there it is right there. Gas Natural Portugal or Spain or something like that. I think it's Spain, SA. And there it is there. Back from the 25s on Friday up to 26. It's showing a little strength there. And that's really what we're seeing out of this whole mess. It'll change. The United States Constitution is very strong. And so in the end, it's going to clean itself up. It may take years or decades, but it will. And it has in many ways. So, what it comes down to is, we just have to let the time play out. But one thing's for sure, it keeps us strong by having all these points of view. And then when we lose those points of view, it makes us weak. And so the financial markets are really upside down. World inflation is pretty much because of America. The whole world inflation is because of us, and it's because of our policies. And we'll clean it up because nobody is willing to do the work. In other words, most of the other countries in the world are willing to just say things but not do things. That's the problem. So, all right, traders, we're out of here. This is Doc from North America. We've got to come up with a title today, and it's going to be, about the math. About understanding the indicators. So that's how we'll play it today. Is that? So all I have to say is, what's that? America comes back always stronger when you look at history. Yep. If we can get rid of the income tax, America will explode financially on the upside. Just explode. Just incredible gains. That income tax really hurts. The taxation is not helpful. Giving government money to spend willy-nilly thinking that they're helping people is a really bad thing. Anyway, happy trails to you until we meet again. Happy trails to you, to all our Dukascopy friends. Later, traders. Have a safe and smart trading day. Arrivederci.